Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. US markets really took off a pretty big time last week, really on the back of sort of twofold. President Biden announced a $2 trillion infrastructure package that'll hopefully be funded by sort of an increase in corporation tax, but again, it's just a further boost to the US economy. Then further evidence that with the states reopening, there is a major boost for the US economy in terms of employment. The latest jobs data show that 916,000 jobs were created in March. That's versus an estimate of around 650,000. We also saw a healthier revision to February's number up to 468 from 379,000. So all that does bode well for the US economy and really puts it more on a recovery stage now rather than a rescue stage. And really does point to the fact that now states are beginning to reopen after the COVID and the sort of increase of the vaccinations now. Really there is a pretty major boost for the US economy. Now that obviously should be good for global trade. Also as well, helping global trade, the Suez canal has been unblocked by that ship that was blocking it. And that has sort of reduced the stress on the supply chain as ships can move freely through the Suez canal. So on the back of this renewed optimism, the S&P now has cracked 4,000. Now obviously you need to just keep this positive momentum. Certainly the vaccine rollout in the US is really gaining some steam now and really progressing pretty well. Now, what will be very interesting now is to see as we head into earnings season, just how the sort of big corporates are reporting earnings, but also as well their guidance now going forward. Now, on the back of that, obviously, oil has traded up reasonably well. It's still sort of hovering around that sort of $60 a barrel on WTI. And a bit of a different case in Europe, as certainly Italy and France sort of face fresh lockdowns, as really the virus seems to be sort of having a third wave there. And, really, it does seem to be the population and, the public now just really sort of viewing that now the vaccine is here, everything is fine. And that's certainly not the case. One, you have to get the population vaccinated, and you have to give the vaccination time to sort of take hold as well. Now, the UK not facing those issues, as really they're sort of easing and relaxing their sort of restrictions, coming out of lockdown, and really things are looking potentially pretty rosy for the UK over the next sort of 3 to 6 months. And that'll certainly be a pretty major boost to the UK economy that really has had a pretty rough last 12 months. Closer to home here in New Zealand and Australia, the big news is the opening of the Trans-Tasman bubble from New Zealand to Australia now, with a quarantine-free travel from April the 19th. Now that's certainly going to be a pretty major boost to not just to the Australian economy, but to the New Zealand economy as well. Certainly many of the tourism operators have really been hanging out for some international tourists, and potentially the tourists coming from Australia now will just give a little boost there to that sector of the economy. So this Trans-Tasman bubble open now, it'll just be very interesting to see what real impact it does have on the New Zealand economy. It's likely to be sort of 3 to 6 months before we see any real sort of impact. But certainly, I say the tourism industry is getting very excited about potentially having a bigger pool of potential customers coming in and spending money. And potentially good news for the Pacific Island as well, because now with the sort of Trans-Tasman bubble sort of nailed into operation, they can look to just sort of transpose that now to the Pacific Islands as well. Now we'll run on a sort of a traffic light situation that if there's an outbreak in one of the Australian states, red will mean travel suspended, amber is sort of just put on hold slightly, and obviously green is all good to go. So hopefully in New Zealand here, that'll gain the government a little bit of popularity again, because certainly they've been suffering in the latest opinion polls. Despite all the talk, no real sign of any sort of slowdown in the housing market here in New Zealand. But again, with record low interest rates, limited supply and excess demand, it's really very unlikely to see house prices falling rapidly. So against that low interest rate environment, if you are looking for income, it is pretty tough out there on sort of bonds or term deposits. But if you are looking for alternatives out there, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.